Hey guys, it's Remo, and this morning, we got some incredible news. And this news is around the CPI data, which is the Consumer Price Index. Probably some of the best news we've gotten all year. So if you've had money in your 401k or stocks, you've seen that 2022 has been a brutal year for most people, probably down anywhere from 50% plus. So, however, it looks like there's some light at the end of the tunnel. And so let me explain. This morning, we were expecting, or the experts said that our inflation numbers were going to come back at 0.06. They came in lower, which is colder, at 0.04. And the year-over-year inflation was also lower than what is expected. So what does that all mean for you and I? Well, the Fed's been increasing interest rates for really this year to be able to pull down inflation. Now, their activity doesn't happen, or the results of their activities doesn't happen necessarily overnight. It takes typically months and sometimes even longer than that. However, we're starting to see that inflation is starting to trend down. And that's a really, really important piece, because that is what's going to get the Fed to stop raising interest rates and ultimately stop keeping your 401ks and everything else that you have invested really down. So give you guys some stats here as of today. I'm recording this video at 1 p.m. Waited till the market closed. The S&P 500 is up 5%, so it's incredible for an industry to be up, that much in one given day. The Dow Jones at 3.5%, and the Nasdaq 7% up today on this news. So it's really what we've been waiting for, is once inflation starts going in the downward direction, that the Fed doesn't have to be as hawkish and continue to hit us with all these interest rates. One thing that's really important, one of the Fed chairmen came out and was speaking today and mentioned that as of last week, the federal fund terminal rate, which is kind of the goal of where they want to get to, was 5.25% to 5.5%. As of this news coming out, they came out and says their expectation is now closer to 4.5% to maybe 4.875%. All that means is we're going to start seeing lower interest rates, or not as much interest rates hikes as we have been. And so if you're thinking about maybe buying or selling, how does that impact me, right? That's a very important question we get often. Well, if you're buying, you're going to see interest rates of mortgages start to trend downwards, because the expectation was, if rates are going to get higher as time goes on, they're going to, in a sense, bake those rates into today's rates now. So they're not necessarily losing money. Now, if the idea is rates are going to get lower, they're going to get ahead of that curve and obviously start maybe offering slightly lower interest rates. So, and with that, as of the 10-year Treasury, which is kind of one of the Treasury bonds that's mirrors mortgages, or somewhat mirrors it, it was at over 4%, and in the last really 8 hours here, it's now down to 3.85. And that's the lowest that it's been in the last 30 days. And I think hopefully it starts heading more in that direction. So bottom line is, it's great economic news that inflation is finally pulling down. It probably impacts some of us a little bit different than others. And obviously, maybe we are still feeling it. However, the point is, there's light at the end of the tunnel. Stuff has gone expensive, so where people are not buying as much, and consumer or what's called merchants are obviously reducing prices to reflect that. And it's not to the extreme, but it's starting, and it all has to start one place, and it starts now. So really excited about this news. It really, I think, is a boost to potentially your 401ks, your whatever you have in your stocks or your savings, and also for the housing market, that we maybe get a pullback from some of these 7%, 8% that we were talking about. Because if inflation keeps trending downwards, we're definitely going to see lower mortgage rates over the next really year or so. So if you're interested and want to know more how that impacts you specifically, if you're buying or selling in this market, and want someone that's obviously has a little bit more knowledge than your typical realtor, please reach out to us. I follow this stuff pretty closely, so I'm glad to answer any questions that I can about this. All the best, and we'll see you soon.